What's up, guys? For today's video, I wanted to make kind of a crash course, if you will, for beginning to get into options. For this video, I'll go over, some keys, in my opinion, as well as my strategy for pre-trade when it comes to planning, for execution, for managing trades, and then how I went about learning, and some advice I would give myself if I could go back in time and do it all again. So, to start, the three key areas that really separate a trader from being good to great or being, choppy to profitable are key levels, support and resistance. And this is just, those levels, whether it be triggers, big support resistance areas, depends on what kind of trader you are. If you are a swing trader, that might be the daily or the weekly. If you're a day trader, I prefer to use the 15 and the hourly when creating my levels. Secondly, and probably the most important, is the emotion side and mental health. Two that really stick out in my mind are greed and bias. Greed being number one can kill your account. A big thing that I, as a young trader, really struggled with was seeing people get 200% gainers, 1,000% gainers, post these on Twitter, and then I wanted that right away, right? In reality, base hits add up. Compounding gains is what we should really strive for, as this is more of a repeatable way to make money, because there are going to be losers. You are going to have losses when it comes to the stock market. It's inevitable. Knives are inevitable. But greed is that one thing that can really kill your account. And then secondly, bias. Bias to me is only playing one side, right? And then the third thing would be risk management. And this goes over, stop loss, scaling, sizing. How much are you willing to risk on each trade? Before I start going over, my system, the pre-trade part, the execution part, and then the management part, it's really important to understand options. As an options trader, we face some things that are a little bit different from common shares or even penny stocks. Some things that I think are very important when it comes to options. The Greeks are important, but to me as a day trader, theta decay, which is the time decay of options, is very important, especially as a day trader. For swing traders and longer term holders, those other Greek names are going to be very important, but to me, that theta crush, the time decay, is the most important. Also included that is volume. That is why on flow I always stay on these first 1 to 2 pages of the hot chains and tickers, because I know that there's enough liquidity to get in and out of these positions. After that would be premiums. Premiums is just the price paid for a ticker, or set for a ticker, for a strike, for a contract, stuff like that. Just understanding how these premiums move in regards to price action, which is IV, right? The higher the IV, the faster the contract price is going to move. Two of the more important things when it comes to understanding options as it pertains to solely options and contracts, to me, are expiration and strike price. So the expiration, in this example, it would be MGI. We have the strike price here at $9 a call with an expiration of February 18th. So that's something to keep in mind, and something to think about when entering into a contract. Don't want to go too crazy out of the money when there's a very close expiration date, as that time decay does set in and it can just obliterate an account. And the last thing that's important when it comes to picking contracts is bid-ask spread. So let's see, let's just click on Apple here. Bid-ask spread is the difference between, the bid and the ask. So Apple here, good volume, so the bid-ask spreads are usually pretty tight. That's really good when it comes to day trading, just because we are filled at prices that are better, as opposed to SQ is a big one for me. SQ's bid-ask spreads are usually for anywhere from 10 cents, maybe on occasion we get a 7 cent, but anywhere from 10 to 20 cents. So It's really hard to get really good entries on SQ, along with understanding options. Another thing that's big for me and I preach is a system. And in order to build a system, we need to understand our personality. Some people, can sit back and are patient, like to play swings. I, on the other hand, not patient at all. Definitely something I need to work on. But I prefer those fast moves, and that's why I love day trading and I love options. It combines all of that for me. When building a system, this system should be tailored to you. And what I mean by a system is a rule or your strategy that increases your ability or your chances to be profitable. Some things to think about when creating that system are, what type of trader are you? What type of trades are you going to place? And this will have an impact on what time frames you use. As a swing trader, most of the time use the 4 hour, the daily, and the weekly charts to assess levels, entry spots, stuff like that. As a day trader, I prefer the 15 and the hourly, execute on the 5 minute, and also incorporate, your schedule and your availability. Some people work jobs, some people go to school, so knowing that availability can really help to build a system tailored to not only your personality but whatever availability you have. As life is life, there's other things in life, other responsibilities, other things to do. All right, now we can start for the fun part. And a reminder, this is my system, what has really worked for me, but I'll break down kind of what I go through every single day and try to condense this information, because there's a ton of information, especially when you first start looking into options, looking into trades. How do I process this information? So I'm gonna do what I use every day and how I kind of block out the noise. So for me, first part of my system, and honestly probably the most important, is flow. And the reason I like flow so much is it breaks down that information for me, but it also helps. When I first started trading, I realized that I was missing big moves, and a reason for that was key levels, but also flow. I was trading tickers that didn't move as much or didn't have this flow, and then when I started incorporating flow, I noticed, these tickers are moving a lot more because I was able to break down that flow. Okay, cool. So when going through flow, things that I look for are high volume, out of the money contracts with a close DTE or days till expiration. The closer the better, right? So for this week, Friday obviously was today. So next week I would look at the 218s, and therefore. I also like to play tickers that have good put and call volume, because I like the ability to play both sides. Given something like today happens where a really weak market after a pretty impressive start. So I'm just going to look through some flow, show you guys kind of what I notice. And one of these is DKNG. So when I look at DKNG, today it started off very hot and the market fell. But looking at this flow, things that stick out to me. So the 218.25 call definitely sticks out, right? $1.50 out of the money. But this 218.28 call really sticks out to me. It's next week expiration, $4.50 out of the money. But on the flip side, we also have that 18.5 put. So this is something that has been termed the magnet effect, right? These high volume, close days till expiration, OTM contracts can act as a possible magnet. So I really like that a lot. Another one that's been really hot and I really like the flow on is Roblox. When we look at Roblox, two things stick out to me right off the bat. First, the most active chain is this 218.100 call. That's $34 out of the money from our closing price today. So that really sticks out. And then, the 60 put, okay, $6 out of the money, like that. But the 45 put also sticks out a lot. Nice volume, some pretty good open interest. And that's $21 out of the money. So to me, I interpret that as there's a big move coming in both directions. Very OTM calls coming in, but also those puts are $20 OTM. So I really like that big play potential in both sides. Another thing, when I create my watch list, I always stay on this hot chains and tickers tab here on unusual whales. And the reason being, we need liquidity to day trade. So staying within these first 50 to 100, I ensure myself that there's going to be enough volume to get in and out of the trade. going to flip back here to DKNG. Another way that I use flow in my pre-trade planning is assessing what strike prices I am going to play. So in this case, we closed at 23.32. So for me, I would play the 25 calls over. I haven't looked at trigger levels yet, but I would play the 25 calls in this case, and then puts, the only put really getting great interest for the 218 is that 18.5 put. But I would say I'd probably stick to those 22 puts just because they're closer in the money, so I ensure myself of managing that risk associated with beta decay, which is the time. As we mentioned, time's not on our side, especially trading those weeklies. So that's one thing I keep in mind as well. Monday through Wednesday, I will trade 1 to 2 OTM in most cases, and then Thursday, Friday, I'll stick more to the at the money or 1 out of the money. Thursday, a little bit more leeway, but on Fridays, I'm pretty strict about going as close as I possibly can to whatever my call or put trigger is. So after I've done that, I hop over to charts. This is one that I just looked at. I had a green day today, so it definitely caught my mind. XOM. And what I do, so the first thing for my triggers is I go to the daily and I look at how much it's moved in a day, or the daily range. Okay, cool. So high to low, about $2 today, about $2 yesterday, about $2. So it's about $2. So for 20%, let's see, 10% of $2 is 20, so about 40 cents each side. I like that. Then I'm going to flip over here to the hourly chart. On the hourly, I'm just looking for key levels. And to me, a key level is a level that has acted as both support and resistance multiple times. And the more times it hits that level, the more significant the level is. Also, to go with that, the higher the time frame, the more important that level is. So an hourly will mean more than a 15, a day will mean more than an hourly, and then a weekly will mean more than a daily. So when I look at this chart right here on XOM, the first thing that really sticks out is this level here at 80.65 was the low. It was also near the low before we really fell off. It also acts as a high over here and a low over here. So on the hourly, it's acted both as support and resistance a couple times. And the big candle before it bounced was exactly off that level. So I like that level a lot when it comes to a call trigger. On the downside, a lot more congestion, right? Levels here and there hitting all sorts of different places. Okay, cool. I'm going to break this down to 15 to really see, more clear levels. And to me, the first one that sticks out is this 79.80 level, which is exactly 41 cents from that $2, or from our finishing price at 80.21. So I like that a lot. And the ATR method, or the 20-25% method, was developed by Adam Silver, and it's really just a way to look where to find levels. It's a reference point, right? And it really can help you break down those levels a lot. So that 79.8 level definitely sticks out a lot to me. I like it a lot for a put trigger. Acts as support over here, resistance in here, and then we're support again. So I like that for a put level. For a call level, I like that 80.65. The next thing I'm going to do when it comes to pre-trade planning is look for possible levels that are my price targets, right? Being prepared for a trade helps immensely. So first thing I really notice before anything else is this level here at 78.7 is massive. Absolutely massive. Cool. So I'm going to throw that in yellow. That's a level that's definitely going to stick out. And then another level that's big is right here at 79.2. So I'm going to throw both those levels down. Cool. My system also includes VPA. And And what VPAs are these little profiles over here. The higher the node profile, the more congestion, the slower price is going to move. But if we have nice VPA gaps like this can move very, very fast because there really is no volume to hold it up. So I like VPA, mix that with the flow, mix that with the levels, and you find yourself some absolute rippers. That takes time, that takes practice, just looking at levels and looking where these gaps are, but it definitely pays off in the end. So once I've set those triggers, I look at these next potential price targets. I use yellow. I just use color coordination, a little bit different colors to really help me out. So next level, this 80.99, 81 level is big. Then over that, I don't really see much on this VPA until about 81.64, but I am going to throw 81.5 in there as a level to watch here on XOM. I like that a lot. So that's how I go. And the reason I pre-trade plan is because I feel more confident in the play, but I also know where I'm going to scale up. So whenever I get to the actual day of the trade, I'm a lot more confident in the play. I know where I'm going to scale, and nothing's really going to take me by surprise. A knife might happen. That's okay. That's why we have risk management. I'll talk a little bit about that here in a minute. But preparing for a trade ahead has honestly been one of the most important things in my trading career, and it definitely has helped me a lot. Last thing when it comes to pre-trade planning before I get into execution, the day of the trade, so pre-market. I always go in and I'm thinking to myself, how am I going to play the gaps if this gaps? How am I going to play a gap up? How am I going to play a gap down? For me personally, that is waiting on a retest. It's something that really helps me, as entries are definitely a piece of my game that need work to this day. But being able to realize, did it gap up? Is it near my trigger level? And what are pre-market highs, pre-market lows that can act as both support and resistance? So that's one thing I do pre-market every day. When it comes to execution, I always use the 5-minute chart for my execution for the day of the trade. And one thing also before I get in, in pre-market, I'm thinking to myself, I don't want bias, right? I want to trade price action. So that's cool. In this case, this is Roblox from today, Friday, and my call trigger was at 71.4. My put trigger was at 68.4. So off open, we open at 9:30. We're getting up, start testing these levels here early. For me, I don't trade the first 15 minutes of market open just because those premiums and the spread is usually a little bit higher. So entries are, as I stated, one of my weak spots. This allows me to kind of take that out and really let those premiums settle a little bit. So in this case, my call trigger is up here at 71.4. We are denied 3 times at this call level before falling off. And even though it's a call level, I can take puts here. That's just a reflection or a pivot point where price needs to get over in order to make a decent move. And I had assessed that the day before. Okay, cool. Another thing that helps with my conviction here in taking puts on a failed call trigger would be these very long upper wicks. The type of candle is very important when it comes to entry, and they're not exactly 100%, but they go to show what people are thinking. Long upper wicks means sellers are stepping in. Long lower wicks, buyers are stepping in. This can be in accordance with volume. The higher the volume, the more valid the level is, meaning when there is volume, the likelihood of this move sustaining or direction changing is much higher than it is when there's low volume. You need volume to get through those levels and to really create good momentum. So when it comes to execution, I'm always waiting for a 5-minute close above or below my call or put triggers. But I also like to play failed call and put triggers, as I stated. In this case, would love to play failed call trigger here on Roblox. We tested this 71.4 level 3 times and could not close above it once. Very ugly upper wick here on this candle. Another ugly upper wick. So we had multiple times to enter into this trade off of that failed call level. Like that a lot. Once I enter into here, the first level I would watch is this level right here, about 70.14, 70.15, created by intraday support. And then after that, I'm really watching that support level I had identified, or my put trigger the night before, at 68.4. In terms of indicators, the only indicator I use every single day when it comes to day trading is VWAP. And the reason being, this is mainly because most traders use it, so I like that. And then it is an indicator technically, but volume profile I also use as well. Other than that, I like to keep a really clean chart, and I like to play trends. I like to play key levels. In terms of earlier in the day is when I really play key levels. I use these a lot, and then once we start to establish a trend and I can identify patterns, I play those later in the day. That brings me perfectly into a topic that's pretty important and something I use every day, and that is candle types and the ability to identify patterns. So for me, patterns that I really like to play are double tops, double bottoms, bear and bull flags, and wedges. So I'll put a tweet out about it and tag some nice resources on learning those. But I would go about learning a couple patterns, doesn't have to be all of them, but learning patterns and then looking to identify them when you trade. This can really help you a lot. I use patterns more when we've set up a trend intraday, but you can also identify these on the daily chart, and that can help you a lot be able to identify potential breakout or breakdown spots. In terms of candles, I'll put another one about this, but my favorite thing to look for are long upper wicks for playing puts, and then long lower wicks, hammer candles for playing calls. And the reason being, long lower wicks signify that there are buyers stepping in pretty heavy at that level, and they defended that level. And then long lower wicks, sellers stepping in pretty heavy. Another thing to remember when it comes to candle types, they are more important when they are at key levels, right? So in this case, this is a very, very important candle. This is another important candle. And this is the most important candle. The reason being that 71.4 was tested twice. This is an exact double top here before falling off. So that's one thing to notify. And then this nice little hammer candle here was also a potential good spot to enter into some calls for a quick scalp. My biggest advice for if you're struggling with entries, it is to wait on a retest. And I do this still to this day. It's probably my favorite way to play it, just because entries are something I do struggle with. I'll be completely honest about it. I'm not the best at entries. Okay, cool. Got that out of the air, whatever. So I wait on a 5-minute candle close above on a retest. So there's a question being asked, what is confirmation for you? And for me, the confirmation is that 5-minute close above or below my level. If we notice here, we tested this level right a lot, but then we have this candle down here. It closes right above our level at 68.4, long lower wick. It's a put trigger, right? So say this was our call trigger, right? We have a nice hammer candle, closes above. I would very, very confidently enter into calls here. And the reason being, shows the buyers step in, right? We get a close almost perfectly above our level. And I have that confirmation, the 5-minute. No, we didn't get a retest. Okay, cool. But I have that sense of knowledge that buyers have stepped in. We closed above our level. So if it does knife, I have risk management in place. I'll take my loss. I'll accept my loss. But I do know that that's a very high confidence place, pretty low risk place to add into calls. Last part about executing trades, and it kind of goes into managing trades, is every day I keep or have a general sense of where SPY is. Today I drew these intraday levels at 447, 448, 28, and that just helps me with knowing, where possible knives are, where possible bounces are. So that's one thing to keep in mind. I always have SPY, a relatively decent idea of what the overall market's doing, because it does affect how tickers move, right? So that's one thing I do recommend is watching SPY a little bit, knowing some of those levels, but also VIX is one that is not often talked about, and VIX is just the volatility index. So SPY and VIX are inversely related. When SPY rips, VIX goes down. When VIX rips, SPY goes down. Now, when it comes to, I'm in a trade, but I need to manage a trade, this is one of the most important parts of trading, and that is risk management. For me, I always have a stop loss set at 10% hard stop whenever I enter into a play. And a reason being, I don't want one play to blow up my account. Secondly, when it comes to entering into a trade, is position sizing. For me personally, I never risk more than 5% of my entire account on one play, and that's similar reasoning to why I have a stop loss. For a beginning trader, I would recommend just trading one contract, and the reason being, let's build up some confidence. Let's build up our ability to trade that one contract well before upping the size, which increases risk. So that's one thing I would recommend, and I still do to this day. When I'm trading bad, I will only enter into one contract and take my profits early. That's another thing when it comes to managing a trade. Green is green. Take profit. The question was asked, how do I stay in plays longer? And for me, that's through the use of VWAP, but also through the use of consolidation phases like this, or buyers or sellers stepping in depending on what side of a contract I'm in. So in this case, pretty high confidence entry spot. We're below VWAP, so I do use VWAP. Below VWAP, bearish. Above VWAP, bullish. Cool. So when it comes to staying in trades longer, I'm pretty confident here. We're testing this level a lot, and then we fall off, get a nice move. Might take a little bit longer than expected, but I like it a lot. When it comes to staying in the trade longer, I use a scaling method of 20% for my first third, and then after that I go to the next price target, which would be in this case 68.4, and then my last third I just leave runners. Another thing when it goes to that, when I'm up 10% on the play, I will move my stop loss up to break even to ensure that I don't lose money on the trade, right? Nothing is more demoralizing than a green trade going red. It just makes you feel, awful. But when staying in longer, I want to ensure that I have profit made. So that's why I scale at those two levels first, and then those last third runners are simply profit money, right? Like, I've already made all my money back, so those are running for free. I can adjust my stop loss up to break even if I really want to, or 50, 30, 75, whatever percent you feel you like, right? But in all honesty, you could put that stop loss at break even and be perfectly fine, because those are profits just running. So that's free money, potential to make more. Really, really cool, pretty stress-free trading, right? But when it comes, getting back to my point on staying in longer, that's where patterns come in. And in this case, say I enter in up here, get my close below VWAP, so I'm probably about 20% in here. Cool, I'm scaled 1/3, have my stop loss set at about 10% right now. Cool, I'm still below, cool. And then the next place I'm going to scale, that right around that 68.4, identified level from the day before, like it a lot. I'm 2/3 out. Now I just have runners. Perfect. I got runners. I can adjust my stop loss, 25, 20, 30%, whatever you really want. For me, sometimes I'll just put break even and let them do what they do. But whatever. So I'm still in those contracts. I have my stop loss set at break even. Awesome. And then it just falls. Right here would be the region I really, really watch to take all that profit that I still have running, all those contracts out, because we are getting consolidation around a level of bounce, another very big support level. So I'm going to watch that for sure. Maybe I still keep those runners through. Cool. I would have definitely scaled out, in my personal opinion, just because, that's a bunch of consolidation here, bunch of wicks bouncing off that level that we identified before. It's a double bottom potentially forming here on the 5 minute, and then we get the knife. This is where, the massive tweets you see about 200 to 1,000% are really, really made, is when we get that first nice big move, consolidation, and then a move either down or up depending on whatever contracts we're in. But if we play off that 71.4 rejectal, say we're playing 70 puts in this case, those suckers are going 500, 600% today, which is something really, really cool to see. And I like a lot when it comes to trading is, we're trading price action, right? We can trade both sides, and we can use what we know about levels, what we know about candles, what we know about patterns to play failed call and put triggers. And those are one of my favorite ways to play my watch list. Now, when it comes to my advice on how to learn, especially starting out new. So the first thing and the most important thing, in my opinion, is screen time. You can read all the books in the world, you can learn all these things, but screen time is really the one thing that I would say is needed. Another thing to go with screen time, screen time is cool and all, and you can talk about where you're going to enter or where you're going to exit, right? But until you actually put money, until you actually do it firsthand, you don't get the most important part of trading, the hardest part of trading, and that being emotions. So that's why I believe, starting small, because you don't know what the emotions feel like right off the bat, right? But once you start feeling those emotions, that greed kick in, once you get that first banger play and you want more, and then it turns red, oh man, one of the worst feelings in the world, I'll tell you that right here. That's simply only because of greed. So that's something you'll definitely learn. I promise it'll happen at some point in your trading career if it hasn't happened already. The next thing that I would really, really recommend, and it helped me a lot when I was going from a small account, starting to build my account up, is learn 3 to 5 tickers. Select these tickers, chart them every day, know how they move, really, really learn how they move. I have a video on how to do that, or how I go about doing that. If you want, I'll put that link in the description as well. But this is something that really, really helped me, and I preach every day, learning those 3 to 5 tickers. Once you learn those 3 to 5 tickers, then you can start to build up your watch list. You can start to incorporate more tickers. For me, I have a list actually. Top 5 right here. So my top 5, Facebook, Microsoft, Neo, PayPal, and SPY. Another one that of recent I like trading a lot is Roblox, just because this flow is pretty intense. Contracts usually aren't too bad, and it moves pretty well off of support and resistance, so I like that a lot. The next piece of advice, this one comes about how to learn, but it also has this tie to social media. Focus on following quality people who are there to push education if that's what you really want, and to learn how to trade, right? Taking alerts is cool and all until it doesn't work. But when it comes to social media, there's people out there that post key levels. Some of my favorites, Adam Sliver, big fan, one of my good friends. I post key levels. Channing Tatum, Ziggs, Young Iverson. There's plenty of people out there that post levels. CD's Trade is another great one for small accounts. Really like his work. Really good dude. When I first started trading, I would chart my levels, make a watch list first, and then I would chart the levels and then go look on Twitter at these people's watch lists. What levels are they watching, and how the hell did they get these levels? That's the real big determining factor. You can play the levels, right? But if you truly want to learn how to do it yourself, how to be self-sufficient, it is about learning why these levels were chosen, and how they were chosen. That goes for flow breakdown, that goes for levels, that goes for, anything really, is just understanding the why. That's what separates the people who really have that drive to make it, that work ethic to make it, from those who think they're serious about it but really just want to play those levels given. And that's the reason why I give levels. It's for, I love seeing people make it. I love getting texts or tweets or anything, a DM, anything like that, seeing people making money. But what motivates me the most is seeing people send me a DM, send a tweet that isn't even a ticker on my list, but they said, because of one of my videos, because of something I said about levels, they identified the level themselves, then they were able to do this trade all by themselves, and it's completely on them. That makes me so happy. That is that first step at becoming self-sufficient, and that's super super cool to see. Lastly, when it comes how to learn, my advice would be there's no need to rush into size. We need to build up this confidence because there are times we are going to lose. So just start with one contract. Just because you start with one contract doesn't mean it make you any worse of a trader, doesn't make you any worse of a person, right? It's just building up this confidence. So start with one contract and then begin to size up once you build that confidence, once you begin to really figure out your system and start really seeing that take off. But start small. It's okay to start small. Another really really great way to learn and to go about trading is build a community, build friendships, build relationships. This could be on Twitter, this could be anyone who shares that similar passion for trading like you do. And on Twitter, a way that I did it back in the day, 15 so followers, was just DM someone, ask a question, start to build up. I'm always here if you want to talk about stocks, if you want to talk about life, just send me a DM. I promise I will get back to you. Not always the fastest ever out there, but when I see it, I guarantee I will respond. And it doesn't matter, it could be life, it could be stocks, it could be whatever. I'm here, so just reach out. I will more than happily talk. You're never a waste of my time, anything like that. I look forward to DMs, to talking to people. And through that friendship, through that community, you can really build from what other people know. But you also have the sense of, accountability. These people keeping you accountable. And then lastly, when it comes about how to learn, we are going to lose. Like that's part of it, right? But learn from those losses and break down your trades every day and why. For me, I do it right after my trade. I'll write down, I'm out of the trade already. I'm not worried about that. But I write down on my my chart here, I'll write down why did I take the trade? Why did I enter? Did I fail or did I win, right? And the reason being is I really want to know why I took that trade. I can look back at it later when there's no emotions and, if it failed, okay, I understand. But how am I going to make that change so that I do it in the moment and so that I really learn from that trade? And then I have 3 pieces of advice that I would give my younger self as a trader, as well as any trader who's starting maybe tomorrow, maybe a week, maybe you're thinking about starting but not too confident yet. And the first one would be prioritize your mental health and your emotions. Mental health is huge. If you're not mentally, clear or you're having something else go on in your life, it's perfectly okay to take a day off. Prioritize your mental health. And, that is one thing that I've really, really learned is if I'm not feeling my best, I'm not going to trade well. And mental health is one very, very big piece of trading that is often very overlooked. If you guys haven't listened to the podcast, Not Financial Advisors, with me and Adam Sliver, for our first episode, we covered mental health because that is solely, in my opinion, the most important thing, not only in life and trading, but just when it comes to being a person. It's okay to not be okay. Reach out, get help, whatever you need to do, but prioritize your mental health. You'll thank yourself in the end. Secondly, realize you're more than just a trader. There's more to life than trading. Go out and enjoy the day. For me, that means, I have a set amount of time that I'll trade. For me, that's about 10 to 11:30ish in the morning, and then I'll come back 3 to 4. But sitting at the computer looking at the screen is pretty draining on not only your mental health, but just physical health. So go out, do a hobby, something like that. That has helped me a ton. I think a lot clearer after that break. I like that a lot. And then the last one, we're going to lose in this game. I've mentioned it a couple times, but the important part is how will you respond to that loss? How will you grow? Will you, get back up, fight again? I failed multiple times. I continue to fail to this day. I will continue to have losers, but in the end, being able to get back in, get back up. The resiliency means a lot more and shows a lot more in personal character, and will help your trading immensely. Sorry, the video is a little bit longer than most videos, but hope that gives kind of a brief overview of my system, how I went about it, and some advice I would give if I were starting from ground zero today. If you guys have any questions, just please let me know. DM, leave a comment, whatever. I'm more than willing to talk, more than willing to answer questions. So just give me a ring, whatever. And appreciate y'all.